With everything going on in the world right now with AI, one of the most common questions that I keep receiving is how would trading be affected by AI? Is there AI that you could use in your trading to have a mathematical edge? Have you used AI in your trading? Are you using AI to trade? Can it do it for you? Is it going to affect you? Is it going to replace you? And in this video, I want to show you a very, very powerful tool that you can use, which uses AI to literally get into high probability trades. So you're going to want to watch this one a couple of times. Make sure you save the video. If you haven't subscribed to this channel already, make sure you subscribe. I'm going to walk you through a very, very powerful tool now called Forecaster. So this is how it works. You go to forecaster.biz. I'll put the link in the pinned comment. Go over to here and click on Quantum Screener. Now what Forecaster is, it's an AI-led platform, an AI-based platform that goes out and does lots and lots of heavy lifting in terms of market analysis, seasonality, projections, historical sample sizing, and it gets all of the fundamental analysis, all the qualitative and quantitative analysis, and it does everything for you and then presents it in a way where you can actually read it and do something with it. So how do you do something with it? Well, you go to the Quantum Screener, and as traders, now you can use this for investing as well. I use it for my investing, but for trading specifically, we're going to be looking at the 1 month period. So this is the period of time we're going to be looking at. And in trading, you want to be in and out quickly. So we're going to narrow that down. And then we're going to just look at the Forex market. Okay, so we're just going to go straight up to the Forex market. And you can see this table now has been presented to us that will give you the highest probability setups in the entire Forex market on this screen, on this database. Now, you can see right at the top, we've got 100% win rate. What does that mean? It means that that sample size over that month, so 26th of March, which it is today, until the 24th of April, which is a month's time, there is a 3% average return with a 100% strike rate on that move going long. Right, that's pretty interesting. The correlation of price right now, in terms of how price is moving right now, is 83%, which is very high. And this is the Swiss yen. Okay, now what we can do is we can go click this button here now, and I mean you can pick a few of these, but I'm just going to go to the Swiss yen. We're going to jump out. And we're going to be taken to this page, which is a breakdown of the Swiss yen. And we've got things like overview, seasonality, projection, and all the rest of it. We're just going to focus on seasonality. And what the seasonality shows us is, look at this, right? So let's just say this is today, okay? Or this is yesterday, say 26th. And this period is how long you want to look forward to into the future. Now, if I just go to here, right? If I narrow this down to say the next couple of weeks, or this couple of week period here even, right? I want to just get in and look at that high probability move. Well, this yellow line represents the seasonality across the last 3 years. So the average movement of price over the last 3 years. But what about the last 7 years? Okay, what about the last 15 years? Well, you can see if we bring those on, they all correlate. They all correlate, which means when they all line up, there is an even higher probability of this playing out. And if you look at the correlation of how price is moving right now, 83%, 80%, 81.3%, that's very high. That's a pretty good probability of being right, right? Now, you can, you can use the seasonality to your advantage that way. And you can bring on as many of these or as little of these as possible. It'll even tell you the best correlated year was 2012, right? 85% nearly. So pretty cool, really, really cool. I mean, there's no other tool that I know will give you that information that quickly, okay? Now, when we scroll down, it will tell you the percent, like the strike rate, okay? So this is the correlation of how price is moving now as opposed to those historical sample sizes. And this is like how the strike rate of that period of time over the last 3 years, last 7 years, and so on, with the average return. So if we're going to get a 2.4% return in this little trade between the 2nd of April and the 18th of April, a couple of weeks, that's pretty good, right? This is just one pair we're looking at. And if you drop down to this table here, it will tell you all of the times, all of the returns, all of the different years, all of the correlations, right, that give you confidence. I mean, we can't make this stuff up. It's already there in history. That's what I love about this. With AI, a lot of the time, you think that it's just you can't really trust it. Whereas this, it's just doing all the work for you and presenting it, and that doesn't lie. I mean, you can go and check all these open prices, close prices historically, and they'll be correct because it's being taken from the historical chart data. So there's no lying. So it gives you confidence that it's there, right? It's happened, it's working. The edge is in your favor. So if you scroll down, you can start to even drill down and see what the most profitable months are, weeks are, days of weeks are, right? So you can see here, the best way to get, or the most highest strike rate day to get in would be a Friday in this case. So it's currently Wednesday. So on Friday would be the day that we're likely to see that move play out. Well, what can we do to actually get in then so we don't miss it? Well, this is where you go into your chart and you look at the pair that you're looking at, the Swiss yen. You see that we are, moving bottom left to top right, so we're in a bullish trend as per the seasonality showed you. And then it's just down to you whether or not you've got an entry technique to get in. Now, if you're just trading off of the quantum screener on Forecaster, then you could just go over to the Swiss yen. You're not looking at any technical analysis. You're just buying. Right? You're buying and you're going, right, I'm going to get in now and I'm going to get out at mid-April or the end of April. And that can literally be your strategy, because if you pick a few of those, if you pick, like, say, come in here every day and you pick the top 3 or the top 5 or stocks or Forex or whatever it is, and they're all above 80% strike rate, that's a good strategy in itself. It's no different from doing all of the qualitative and quantitative analysis on the stock market yourself, all the value analysis on a stock yourself. You're just getting it from a presented format that does it all for you, okay, which is really, really good. So even if you just did that, you're way ahead of what most investors do. But if you're using it for trading, this is where, you want to make sure that you're picking some good pairs. You want to pay attention to spreads and slippage and, all that kind of stuff, broker commissions and stuff. And I always recommend that if you are brand new and you're just using this method, you want to focus on, say, the major pairs, for instance. So where there's the dollar, they have the lowest spreads because they're the most frequently traded. Any pair with any major cross, so the dollar pound, the dollar yen, the dollar euro, all of the major pairs, and then just start there, right? So the Swiss yen is not considered a major pair, but it's still two of the biggest traded. Okay, so this is what would be considered a minor pair or a cross. So this is Swiss yen. This is the one we're going for, and the way you'd get in is I don't like the look of this triple test up here, right? So we've failed to put in a new high. So I think we might see a little bit of consolidation before this rallies, which ties up with the forecaster projection. But I do like the look of this setup. Now, for me personally, I would love to have a stop loss down here. But I have an entry technique where I have a rejection. So this is something called a daily chore. And this signal here is a daily chore signal. So it means that I wait for the candle setup where we open and close in the upper third of the candle. Okay, and then the open and close in the upper third of the candle, and we have this rejection to the downside. It has to push into the exponential moving average, and we've done that. So what happens then is I place my buy stop order a couple of pips above the high of that signal candle, and my stop loss order a couple of pips below the low of that signal candle. And then hopefully we get triggered in, and then we can take profits off at the high. So this is a really nice, if I bring this on and I can draw this on so you can see the risk reward profile, it's about a 1.6 to 1 setup. So really, really nice. If you want to hear more about this particular strategy on how to get in, let me know in the comments. But as I say, even if your strategy is just to come and buy and sell in mid-April just based on Forecaster, that is a strategy. It's just you're going to have to know a little bit more about position sizing, managing your risk, where your stop loss goes, and all that stuff. So it's not complete, but if you're using AI to do your trading for you, all of the analysis is done on Forecaster, then you just go over to the charts and place your trade. If you want to know how to place trades and all that, I've done videos on trading for beginners where I walk you through start to finish. I've walked through strategy development videos. I'll put all of those links in the description, right at the top of the description, so you can go and watch those next. But if you want more on this, if you want me to dig deeper on more of the features on Forecaster, which I'll also put a link to in the pinned comment, you can go and get Forecaster. Let me know and I'll show you how this amazing tool can help give you an edge in the markets. So until next time, take care and I'll see you then.